Crypto markets decouple from risk assets and stage a strong rally. Vol remains high as weekly options flows counter high realized volatility. Put protection looks cheap, especially on Ethereum, for those looking for protection. All this and more in this week's Crypto Insight. Okay, so crypto this week, what's been happening? Proper rally. So we stabilized, we'd had a bit of a dead cat bounce. This is starting to look something a little bit different to a dead cat now. Okay, so we had that sell-off down to 3,300 on Bitcoin, bounced to around 38, 39. That's fair enough, still in a downtrend, dead cat expected. This latest up move to 45, that's got the shorts having a bit of a nosebleed, I think, right? So that's very strong price action, particularly over the weekend. Now, this move, what makes it so impressive is it's independent of equity markets, right? We've had a very high correlation to risk assets and equities, particularly tech stocks. And, whilst they've remained heavy last week, crypto's just been, rallying strongly, okay? So the question is, what's driving this rally? Now, we have been signaling there's been some speculative shorts still from the kind of futures. Maybe that's a bit of fuel for a rally. But if you look at the news flow, the main news flow really has been India imposing taxes on crypto, which ironically has legitimized the space and kind of taken away that risk of just a complete ban, basically, right? And arguably, with their push to central bank digital currency and proper taxation rules around digital assets, you're opening up the digital asset space to 1.4 billion people, which could be taken as quite positive for growth in the area, right? So that is probably your headwind, not your headwind, your tailwind that you've had this week in crypto. If you can't beat them, tax them. It's probably what a lot of, countries are going to end up doing, okay? The US House of Representatives Committee has got a hearing on stable coins on Wednesday, which will be closely watched by the crypto community, but it's unlikely any legislation is going to pass the Senate between now and the midterms. So again, it's more like what signaling and what they're saying, but nothing concrete is really going to happen for a while, probably in that space. Okay. All right. Now, if we look at the technicals in terms of levels, like I said, 40K was a bit of a level, then was 42.5K, and then that last confluence up here at 45.5 is where we kind of pinged and dropped back down again, basically, right? So that's held at the first test. 42.5 is going to be kind of now your new support area to see if this thing can actually, build some support and actually stage even more of a rally. I think that's kind of your last hurdle, maybe around here, up at that 200-day moving average at 49K is your last hurdle, remains to be seen. But, after you get above there, it's going to be hard to maintain that bearish thesis that I've been going on about, which is that this larger degree correction is incomplete and will complete somewhere around that 30K area, basically, right? So it really does need to start rolling over soon for that 30K target to be in sight and actually likely to be tested, okay? If we look at Ethereum, then, similar sort of structure to the move, kind of popped its head above this downtrend, but kind of met this confluence at 3,200 and kind of rejected that. Like I say, the downside's pretty significant down to 1,750 if this thing wants to go, but for now, it's holding on for dear life. For me, I still think the risk reward here is to be buying puts. Volatility is really low. Markets retraced a decent amount of that down move. Lots of headwinds still. Don't think they're about to disappear. So I would suspect we've got a down leg. Whether the down leg takes us to new lows remains to be seen. I still suspect we've got a bit of a down leg though. Okay. For now, my view hasn't really changed. Okay. But the easier way to play that is through put options because there are actually quite good value now. Looking at the on-chain stuff, Now, the on-chain stuff has been getting a bit of heat lately in terms of its usefulness to be able to predict anything. I don't really use on-chain to predict anything in the short term. Right now, obviously, we look at the futures funding rates and things like that. That can be helpful to signal whether there's likelihood of a squeeze or anything like that, like a deleveraging event. But in terms of the on-chain stuff, like what hodlers are doing and whether it's short-term holders and where their P&L is and stuff like that, you know, you can't rely on just that to kind of predict the path of the market. It's just one of the many ingredients, basically, right? And I think it's just something to keep an eye on because we don't really have any other fundamentals, right, in crypto, yeah, unlike, you know, equities or whatever. So this is about the closest you're going to get to any fundamentals in crypto. So that's kind of how I see it. But always, fundamentals are never really a timing tool. So I think that's what you need to be aware of. Anyway, so what have I got here? On the top left, we're looking at, you know, where coins have been changing hands, right? So in the recent range in that 35 to 40K area, you're at about 12% of supply change hands. But you can see, you know, there's still a large sort of area of distribution that occurred higher up, right? Between 45 and 65K, okay? So that's 25% of supply of Bitcoin holders in loss right now. So that could likely provide a bit of an overhang to prevent prices from rallying too hard, absent a massive catalyst, really, to get people excited. Okay. If you then look on the right, the short-term holder, that metric is kind of showing us the P&L, the profitability of short-term holders. They flipped into a bit of positive profit, and that's gone back to the flat line of zero, the break-even line. So the question here is, these short-term holders went from losses to a bit of profit. That's faded away. Are they going to run for the exits at the first sign of trouble, or are they in it for the long haul, right? That's going to really determine whether we get another flush out of positioning where some more short-term coins get resold back onto the market. Okay. We look at the future side of things. Short liquidations dominating still, as you'd kind of expect as the market is squeezing higher, but it's not the sort of flush out deleveraging type thing in futures that we saw, you know, previously back in last July and October. Okay, so it's still relatively muted in terms of size, and you can see the open interest, you know, hasn't really moved that significantly in futures. Okay. So now what that suggests is this move isn't necessarily driven by a lot of short squeezing. And it also suggests to me that a lot of the shorts in the futures market are actual shorts that are against options that are hedging options flow. Okay. So they don't need to be squeezed, right? Because those futures go directly against options, and those contracts will kind of expire together, or they'll be replenished by futures rolling positions or whatever it is. So that monitoring that kind of funding level and the futures, the bias, the fact that people are short futures, it may well just be a consequence of the fact that the options flow that is now hitting the street on a regular basis is kind of the call selling type flows, and dealers who get given a load of calls need to sell futures against those calls, and they have to structurally hold a short futures position until those things expire. Okay. And I think that may be the culprit and may be the reason why we are seeing those negative funding rates in the futures. Okay. And you can see that here, right? Normally when you get a kind of rally like we've seen, which is pretty quick rally, these negative funding rates in the front of the curve would flip closer to zero or even positive as that kind of futures negative bias gets taken away. But it doesn't seem to have really gone anywhere, okay? And like I say, that's how I would explain it. All right, so that's kind of what I'm seeing there. If we then move over to the crypto options analysis. So week on week, you know, you haven't really had a massive shift in the curve, right? So, you know, if anything, the gamma part of the curve, February expiries are a little higher. And the rest of the curve is slightly lower, right? From kind of April onwards. And March and Feb are pretty unchanged. But then that doesn't really tell you the full story, right? So if we look here on the right, this tells you for the different expiries, like what they did over the course of the week. So they kind of flatlined into the week and then into the weekend. Then they absolutely collapsed, right, by about 10 vol points. And that was across pretty much every single maturity. And then you've had a recovery in the front as the market exploded higher and kind of started to threaten breaking out to the upside. So the pink line flew back up again, which is the 1 week gamma, 1 week volatility, which had been obviously depressed by the flows, the DOV selling flows. But that was kind of, so we ended up not much change, but it was quite a volatile period over the week, basically. Okay. Now, what was it that drove that collapse in vol? Well, actually, there was some significant selling out of Asia over the weekend or heading into the weekend. So you see here, you had February 25th, you had like the 44K calls on Bitcoin trading there, getting sold. You had the March 45K calls and the June 50K calls. So all these spikes, these blue bars show you the premium traded, and it's on what strike it's traded. And it's basically just smashing out volatility on slightly upside strikes across all maturities. So given that happened in Asian hours, liquidity was a little bit thinner. It just took the entire curve down 10 vol points, which was pretty aggressive. Okay. And then people stepped in after the weekend to bid back the front because the gamma was just way too cheap, basically, right? And they just didn't make sense to keep it down there. And, the reason the gamma is cheap is because, there's an overwhelming supply of gamma. The street just keeps getting flooded in, right? We all know this. We know it's the weekly volts that are, overwriting calls, selling puts, and there's a decent amount of money getting locked into those, in the hundreds of millions of dollars, and that's supplying market makers with a load of short-term volatility on a weekly basis. Yeah. Now, a nice way to see that and where that hedging activity is kind of finding itself is here. If we kind of home in on, what we're seeing in terms of the most traded strikes, you've got, 11th of February, 40K calls, 42K calls. So here, trading in decent size. You've got the 45K calls here as well. And then on the downside, you saw puts, they're not going to have much meat on them anymore. But that's basically what was going on. So you've got decent volume in those 11th of Febs there, 11th of Febs there, which is clearly coming from volt hedging. You look at here, you've got the 30K calls in ETH, the 25 puts, the 29, look at that, the whole ETH spectrum. All of this stuff is coming against the weekly expiry. So it's all volt hedging, basically, right? I mean, that just goes to show what a ridiculously large impact the volt flows are having on crypto volatility. Yeah, there's just no denying it, right? Okay, so that's basically where you see that stuff. Now, talking a bit more about what's going on in terms of realized, it's a funny environment. So we know it implies the trading really low because there's an overwhelming supply, and realized is quite good value. But even realized is behaving in quite a strange manner in that it's quite sporadic, right? It's quite episodic, basically, in terms of, you see here, the realized volatility, it's kind of a bit of a step function, right? So it stays quiet, and the realized vol is the blue, stays quiet, then has a massive spike and then goes quiet again, right? So it's kind of, you get these days of not a lot going on, right? Where market's moving maybe 2 or 3% a day. And then suddenly, boom, you get this 10% shift, okay? And that's kind of what we've been seeing throughout the month of January, right? Which doesn't make like dealers' lives particularly easy, right? Because, if you hold on to that gamma for 3 days and it doesn't work, you might be tempted to dump it. And then all of a sudden you miss a 10% move, basically, right? So it's quite a hard environment, I would say, for the dealers. And the guy at QCP recently in an interview kind of said the same thing. He's like, I keep getting stuff in all this cheap gamma from vols. They must be making money in those vols because I'm struggling to make money on the long side, right? And I can see where he's coming from. I can understand his pain, basically, right? I'm glad I'm not a market maker right now getting stuffed in all that vol, and I get to choose as and when I dip my toes in to buy that gamma, basically, rather than being the liquidity provider in it, basically. I'm not in a rush to do that. Okay, and then the last thing kind of on the vol side, to kind of be aware of is what Skew's done. So Skew obviously blew out in that sell-off originally, compressed to more normal levels, and it's continued to go. Obviously, markets now starting to look to the upside a bit, maybe speculate a bit on calls now. Markets feeling a bit more buoyant, decorrelating from equities, those type of things. So you can see the calls, the skew's just kind of gone very close to zero. It's very slight premium for puts, but it's gone in Bitcoin, it's kind of gone sub 2 for puts. So pretty close to neutral again, right? So more compression of puts. So again, for people who actually think we get another down leg in the market, great time to be stepping in and buying puts of any maturity, because the skew is kind of back to the lows of where it's been for a while. And then the last thing before we go is what's going on in the big blocks, right? What are the big players doing in terms of paradigm blocks? So here we've got Bitcoin on the top chart. The kind of predominant strikes that are trading have been those 30K puts. If you can see here, these 30K puts, trading across various maturities, 11th of February and March 25th being the highest volume expiries. In terms of what structures these are being used, it's kind of put spreads where that's the back strike, that's the strike being sold. In terms of the short end, in terms of there's some risk reversals that have been trading as well. So that's like the long strike of a risk reversal. But if you look at the percentage puts to calls, we're actually, in favor of puts now, which is not something we were seeing at all last year. It was always in favor of calls. So that the picture is changing a bit now, right? You've got more options players, a more balanced market, people playing both the upside and the downside. Okay. If you look at what's trading in Ethereum on the blocks, really the 30,000, not 30,000, the 3,000 strike, the big one, being used in September call spreads, 3,000, 6,000 call spreads traded in September. You can see that in the gray. And then, some outrights being bought in March in a decent clip as well, basically. Okay. And then the front end stuff, obviously, the front end stuff trading, but that may well be against vaults and things like that. Okay, and so that's pretty much what's going on. In terms of what I've been doing, subscribers will know this. I have been adding put protection, particularly in Ethereum, as we've been trading up. I think that's where there's some pretty good value in terms of the vol getting, hit, in terms of the flows. Lots of potential to the downside if this thing does roll over in terms of technicals. So I think owning puts in Ethereum makes a lot of sense if you're looking for protection, or if you haven't done it yet. And then the only other thing I kind of did was I had some Solana call ladders that I had on Delta Exchange. I took some profit on those last night, as I kind of thought the market was looking a bit tired in crypto. It may roll over finally. So I just wanted to monetize a few of those call ladders, which had worked quite well, right? I paid like 1 for them, was exiting them at about 7. Still got a few call spreads left from that trade, just in case. But now I'm probably tilting my position a bit more to the short side now. Yeah. And that is it. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.